Hello, everybody, and welcome to IC Markets Market Commentary. My name is Tamar Mer from Trade with Precision, and today I want to do a spotlight on the Japanese yen. So, last week we saw a strengthening of the Japanese yen in what appears to be the third intervention by Japanese authorities in the currency market. But if we'll take a look at the technical and have a look here on the monthly chart of, let's say, Swiss yen for an example, we can see that we had a very strong uptrend on these markets. And what we had is overextension, meaning a big distance between where price action was sitting and the moving averages. So we were due a pullback. So let's have a look at this pullback and an area that I am currently stocking for potential opportunities. So I want to go into the weekly chart. As we can see here on the weekly, we are back into the averages. We still have the moving averages 10, 20, 50, all fanning, all in the correct order. And what I'm looking for is this area of the 175. So if we drop down into the daily chart, we can see we had a couple of touches at that area. Now, this is a deeper pullback in the context of the daily chart. So I'm looking for a bit more push toward that 175 and any signs that the buyers are returning into this market. Similar story, but a bit higher sits Aussie yen. So if we'll have a look here on the monthly chart, we can see the strength that we saw here on the Aussie, and currently we are pulling back. So the level that I'm looking at on the Aussie market is this area around the 105 level. Again, we had a couple of touches at that level, and if and when the market will pull back into that area, we're also going to be back into the averages on the weekly chart. Once again, looking here on the daily, we can see that the daily already passed the 20 moving averages, and if and when we'll get into that level, that will be a deeper pullback in the context of the daily, but I'm looking for a higher time frame move. So all of these opportunities are really looking at levels and areas on the weekly chart. The next one is a dollar yen. Now, dollar yen is already at that level. So if we go quickly into the monthly, same story, strong uptrend and overextension. Now, if we'll take a look here on the weekly, the pullback was quite strong and we are back into the averages. So looking at the daily, we can see that we're already at the level that I marked in and around the 157.80. So dollar yen has already pulled back into the level that I like. However, if we'll take a look here on the 4 hours, we can see that we are still showing a downtrend. So I still need to see signs that the buyers are indeed returning into this market. The other level that I'll be interested in if and when this market will keep on pulling back will be in and around the 153 area. So dollar yen is at that level, but it's still showing some seller strength. The next market is Euro yen, and the level that I'm looking at here is around the 171. So as we can see here from the daily, once again, a deeper pullback. But if we switch up into the weekly chart, we can see that if and when the market will pull back into that area, we will be back into the averages. Still a nice uptrend, moving averages 10, 20, 50, all fanning, all in the correct order for an uptrend, and also nice convergence here on the momentum indicators. So similar approach to this one, looking for a bounce of that 171 area. In any case, still looking to lower time frame to see that indeed the buyers are taking over. Lastly is Kiwi yen, and the level that I'm looking at is around the 95.50 area. Now, as we can see, it was a level of resistance, which then turned into support. And from here, we were able to push to another higher high. And if we'll take a look here on the weekly, we can see that we are back into the averages. And once again, then we have the moving averages 10, 20, 50, all fanning, all in the correct order for an uptrend. So with all of these pair, I am looking for a lower time frame entry into a weekly or a higher time frame move. Happy trading, everyone. Bye for now.